Welcome, ladies and gentlemen. Commodity TV here for you in Zurich, and we are here for the Zurich Invest Night. And with me here is now for an update Argonaut Gold and Peter Dougherty, the CEO and president of the company, wants to give us the insight. Peter, welcome.
Well, thank you.
Great to have you here. Thanks for taking the time. I think it's approximately 1 year ago we were talking about, and I think you had a very good 2018. Maybe you want to elaborate a little bit on 2018, especially on your record quarter here.
Okay, well, thank you very much, and thank you for having us on again. 2018 was a record-setting year for the company. Records for production, not only for the quarter, but also for the full year. The interesting thing for the company, 2 years ago, we set a target of reaching a 65% growth rate, rising to 200,000 ounces per annum. We were able to achieve that during the fourth quarter of the year, which was significant. And it really is going to start to pay dividends here as we roll through this year.
Super, and I remember you told me that in an interview. I remember that actually.
Right.
So you are delivering, that's great.
Well, we're trying to do the things that we say and we promise to our shareholders. We try our best to deliver upon those actions.
Great, and I heard the word dividends, so how much you are paying?
We are not in the process right now of paying dividends. We're actually still reinvesting back in the business as we continue to grow that production profile forward. We anticipate when we achieve that 300,000+ ounce range that we will be then in a position to pay a dividend back to our shareholders.
Okay, great. So the 300,000 ounces, that's a fantastic number, I would call it. Where do you see the AICs? Meaning the all-in sustaining costs.
Well, when we look at this year, this coming up, 2019, we expect to be producing between 2 to 215,000 ounces at a cost of roughly around $1,000 all-in sustaining cost. That should yield enough cash flow to actually add back to the balance sheet and reinvest back in the business further, another $50 to $60 million this year. That should help us take the next step towards rising towards that 300,000 ounce gold production target in the future.
Wow. Okay, that sounds great to me. But let's say when you say on the one hand you can reinvest, of course, that is fantastic. Do you have to take any debt on the company, or how is the financial situation?
The financial situation for this company is very solid. We have had a history of not applying debt or going out constantly and asking the shareholder to reinvest back into the business. The only times we've actually invested back with the shareholders' money has come through the acquisition of various assets. So the debt position of the company, very favorable right now. We have in place a revolving line of credit that can go up to a maximum of $75 million. So tremendous flexibility for the company towards building the next phase of this company forward.
Fantastic. How was the development in 2018? Let's call it exploration success in, let's say, in regard with mine life extension, resource extension. Can you comment a bit on that?
Right. Well, 2018 was really the first year of starting to build up a new project that we had just put into production. So we were ramping up the production there, investing back a bit in exploration, trying to extend the life on that project and some of the other projects. Whilst we saw a fall in the gold prices, we still were able to hold and maintain that production cycle as we look towards the future. 2019 should be another year where we look primarily at harvesting the cash that the business will generate back off and start to rebuild that balance sheet towards the next investment cycle as we try and ramp that production. So I'm happy to report that I told our investors that in February, in mid-February, when we released our fourth quarter earnings call, that we were doing quite well. I said in order for us to be successful, we would have to A, add cash back to the balance sheet, B, be able to de-risk our projects, and then C, with that, produce over 50,000 ounces. I'm happy to report that while the numbers are not out yet, we had a fantastic first quarter of the year. It sets us up nicely for what's yet to happen during the year. As we look to the future, the thing that really excites me about this company is that there is a possible re-rate in the stock just from going from this 120,000 ounce a year producer to a consistent 200,000 ounce a year producer. That is dramatic, and that will happen as we do what I call the blocking and tackling or delivering day in and day out.
Okay, super. Can you give us a little bit of a guidance for your, let's say, cost development in 2019 and maybe further also for 2020? I know forward-looking statement, we all know that, not exactly, but maybe when you said $1,000 all-in sustaining cost, will that drop also further when you increase the production?
Yes. So what we would anticipate happening here for 2018, we were below $1,000 for our all-in sustaining. We had anticipated when we budgeted this year nearly $1,000 per ounce for all-in sustaining cost. Now that's based on a production profile of about 200 plus thousand ounces. If we increase that production profile, hence our all-in sustaining costs should drop. And as we look out into the future in the next year or 2 or 3 years, we have 3 development projects that I'm quite excited about. As a company our size, you usually don't have 3 development projects that are this advanced. We believe by October this year, we should have the permits in hand on all 3 of those development projects.
All 3 together? Wow.
All 3 of them at one time.
Fantastic.
So fantastic future ahead. The interesting thing about all of those development projects, each one of them will produce more gold individually than we do at each one of our current operating facilities. So more than 100,000 ounces coming from each one of those individually.
Wow.
At significantly lower cost. Our cash cost on those operations can be anywhere from $500 to $670 an ounce. So a much lower cost profile than we're running today. So the future truly does look bright for Argonaut as we look towards the future.
Definitely. All those 3 projects together. So I guess now that is, let's say, a timetable for the next 3 to 5 years to bring them all into production. Can you maybe give our viewers a little bit of an estimate or an idea how much do you have to invest for those 3 projects?
Right.
And of course, can you do it then out of the cash flow, or do you have to raise some money? What is the situation then?
So each one of the projects is unique, and as are their locations and the returns associated with them. Our highest return project would be our shortest life project, which is about 15 years right now. It has a capital investment profile of roughly around $85 million, would produce 100,000 ounces a year at about $500 to $550 an ounce, yield a rate of return somewhere in the 60 to 70% range right now.
Wow.
The second project that we are submitting permits on this year, this project is a project we just picked up nearly a year ago for about $13 million net of some credits. This project, we believe, can do somewhere around 100,000 ounces a year. Now, the prior owners of this project had completed a feasibility study and said the cost to build it would be about $155 million, and you would produce at about $500 to $550 an ounce, or a rate of return somewhere in the neighborhood of 35%. Our final and our last project that is in development stage would be our Magino project. We expect those permits to come here in the first half of this year, along with the First Nations agreements. Now, this project has a very large and long life, somewhere around 20 plus years. But it has a large capital profile also, about $300 million. It could be producing about 150,000 ounces a year at a cash cost of somewhere around $670 an ounce for a rate of return of 20%. Very respectable in Canada, but not quite as high as the other 2 projects. So we'll have to see where life takes us here in the future.
That's right. But it's almost $500 million, if I calculated that correctly, that what you might have as a CapEx, yeah?
For all those projects.
Yeah, so
yes.
Can you do that by yourself?
So today, if we look at the projects, the San Antonio project, we could be able to construct on ourselves. It's $85 million. The cash flow of the company will clearly cover that, along with the revolver that we have in place. The Cerro de Gallo project, the interesting thing about this particular project, whilst it was $155 million to construct, it comes with a byproduct credit of copper, nearly 160 million pounds.
That is beautiful.
We could sell that forward and therefore cover the financing gap that we would need. The Magino project, on the other hand, I think the appropriate way to advance that project today is to look for a partner, somebody who could come in, invest with us today, build the project at 10,000 ton a day, and then 4 years hence, increase the size of the project to nearly 20 to 25,000 ton per day. Therein, increasing that production profile significantly and sharing in the upside on that project as we move forward.
Fantastic. Last question, what would be, let's say, any challenge you might face 2019?
I think
things you have to overcome.
I think every day we have challenges within this mining business. It's not the easiest business out there to run, but I hope that most companies like ourselves are looking to de-risk and de-lever down some of those challenges associated with running this business. We tend to take a more conservative approach. We plan our business around $1,200 gold. If we get a rising gold price, that's good for our shareholders. It's good for ourselves. But we try and de-risk by the very metrics that we run to run the mines today. We de-risk also by finding quality employees, investing in those employees, reducing the turnovers, and increasing our productivities.
Fantastic. That was a great final sentence. Thank you very much, Peter. It looks quite good, I would say.
Right.
And you are fully on the path to become a 500,000 ounce producer, right?
Well, thank you very much for your time today, and we look forward to talking to you again in the future.
Definitely, that's how we do it. Thank you
All
very
right.
much.
Bye
Thank you. Yeah, ladies and gentlemen, it was Peter Dougherty, the president and CEO of Argonaut Gold. And you heard that the company is in top shape. They have achieved record 2018, very good quarterly record numbers, but also they are on the path really to become, I would say, a 500,000 ounce producer within the next years. And also they have executed what they told us last year and 2 years ago. So that's exactly what we want to see. Management, which tells us here in the interview interesting things, but then also fulfill the prophecy. And that's what you should have as an investor. So check out the company. Thanks and bye-bye from Zurich.